Assalamu alaikum, good evening, and a very, very warm welcome to everybody here. I think if we can, because I do want this to be an interactive webinar, so if we can, could you guys please let us know in the comments where you guys are from and what business you guys have. So starting a business is very exciting, right? You have the ideas, the hustle, the freedom, but let's be very honest. When it comes to the financial side, things can definitely get a little bit intimidating. And I guess that's why all of you are here today. So our presentation is on bookkeeping. It is hosted by the Minara Chamber of Commerce, and I am Humairaa, Moola, your presenter for the evening. So anybody want to introduce themselves?
Assalamu alaikum.
Wa alaikum salam.
I'm
Welcome.
Zahra.
Amina, if possible, are you able to share the presentation?
Yep, I'm just going to share screen now.
Okay.
Okay, can you all see the screen?
Okay, we can see it.
Okay.
Could we please move on to the next slide? Thank you. So if you've ever wondered, where's all my money going? How do I keep track of everything? Am I even making a profit? Then you're in exactly the right place. The truth is that many startups fail, not because they don't have great ideas, but because they don't manage their finances properly. And that's why bookkeeping matters. Next slide, please. Bookkeeping helps you to understand where your money is going. It ensures compliance with tax laws as well as financial regulations, and it gives you the information that you need to make better business decisions. It prepares you for growth and for investor funding, and perhaps most importantly, it prevents cash flow problems and those unexpected financial surprises that can set your business back. Next slide, please. In very simple terms, good bookkeeping is equals financial clarity and equals smarter business decisions. Next slide, please. So in this webinar, I'm going to be walking you through the bookkeeping essentials that every startup owner should know. We're going to be covering the basics of bookkeeping and financial records, how to track income and expenses effectively, key financial reports and what they tell you, common bookkeeping mistakes to avoid, and simple systems and tools to make bookkeeping easier. By the end of the session, inshallah, you'll be feeling more confident in managing your business finances, in staying compliant, and setting your startup up for sustainable growth. I think it's very, very important to know why bookkeeping is important so that we know what we're doing here tonight, right? We're also going to try to make this webinar very interactive. So I would appreciate you guys continuing to engage. At the end of the session, Amina will send a feedback form afterwards. I know this session is only 1 hour long, so I'm going to try and get in as much as I can, but I can't promise that we will get everything into the session. But let's hope you guys fill in the feedback form and we can always come back next time if you guys are happy. Next slide, please. So this is a full list of what we're going to try to cover today. Like I said, we're going to try and go through as much as we can. And let's see how far we go. There is going to be a little time for Q&As at the end as well. Next slide, please. So before we dive in, let me know in the comments, what's your biggest struggle when it comes to managing your startup's finances? And I hope you guys keep reading the comments as well, because you'll actually notice that there are so many similarities between business owners and what they struggle with. So you're definitely not alone. And we're going to try to address those challenges today. Next slide, please. So starting a business is very, very exciting, right? But let's be honest, managing finances can be very overwhelming because you're very focused on building your brand, finding customers, making sales, and bookkeeping is often the very last thing on your mind. But here's the thing, without proper financial management, even the most promising business ideas can run into trouble. So in our first slide, we're going to walk you through the essential bookkeeping practices that every startup or small business owner should focus on in its first year. Now, they aren't just nice to haves. They are the foundation that will keep your business running smoothly and sustainably. Number one, the most important thing and probably the easiest thing that you can do is to separate your business and your personal finances. Imagine trying to figure out how much your business made at the end of the year, only to realize that your grocery bills, your Netflix subscription, your business expenses, they're all mixed up together. It's a complete mess, and it leads to stress, it leads to confusion, and it can even lead to tax problems. So the first step in bookkeeping for any startup is to create a clear separation between personal and business finances. Open a business bank account as soon as possible. If that's not immediately possible, then do have a separate account linked to your personal banking, but do not mix your personal spending with your bank transactions. Why do I stress this? Because when tax season comes around, you don't want to be sifting through hundreds of transactions, trying to remember which ones were business related. Plus, it builds credibility and professionalism when you send clients invoices with a business account instead of a personal one. I'm going to be going into why you should separate your bank accounts in some of the other slides as well, and I'll be giving you more information there. Number two is track every rand. No amount is too small, right? As accountants, we look at every rand down to the cent. So for you guys, it is just as important to be tracking every rand. Every business transaction matters, no matter how small it is, whether it's a 10 rand printing expense or a large client payment, it should be recorded. Invest in accounting software like Sage, QuickBooks, or Xero. At the very least, keep a well-structured spreadsheet. Categorize your income and expenses so you always have a clear picture of where your money is going. This not only makes tax time easier, but it helps you to analyze trends, to control your costs, and to make better financial decisions. Think of it this way. Your financial records are the story of your business. The clearer and more organized they are, the better decisions you can make. Number three is stay on top of invoicing and payments. One of the biggest reasons that startups struggle is cash flow issues. Not because they aren't making money, but because they aren't collecting on time. So here's a very simple, but a very powerful habit. Set a scheduled time every week to prepare and send invoices. Make it a non-negotiable, like checking your emails or having your morning tea or coffee. Also, don't be shy about following up on any unpaid invoices. Business is business, and getting paid for your work is crucial. A simple follow-up email or automated reminder can make a very big difference in ensuring that steady cash flow. Number four is reconcile your bank statements monthly. Bank reconciliation is one of those tasks that people tend to put off, but it's really essential. Every month, take time to download your bank statements and compare them with what you have in your bookkeeping records. This is because making mistakes happen. Transactions get duplicated, bank charges sneak in, and sometimes even fraudulent activity goes unnoticed. So by reconciling regularly, you catch errors early and you ensure that your records accurately reflect your financial position. Number 5 is keep a foolproof record-keeping system. So stay organized from day one or as soon as you possibly can. Imagine you get audited and you have no receipts to back up your expenses. That is an absolute nightmare that no business owner, or for that matter, accountant wants to face. So create a simple but effective system for storing your receipts, your invoices, and your statements. Whether it's using cloud storage like Google Drive or a bookkeeping app, or even the old school filing system, make sure that you have easy access to all of your financial documents. And if you're dealing with paper receipts, then scan it or take a picture of them immediately and file them digitally. A few minutes of effort today can save you hours of stress later. Number 6 is keep an eye on cash flow and your bank balances. You need to know your numbers. Business success is not just about making sales. It's about managing your money wisely. A healthy cash flow means knowing 3 things at all times. How much money is coming in? How much money is going out? And how much do you currently have available? So make it a habit to check your bank balances and your cash flow regularly, weekly, or at the very least, monthly, because this allows you to plan for upcoming expenses, to avoid overdrafts, and to ensure that your business stays financially stable. Number 7 is set aside money for taxes. This is something that I do teach my clients to do, and I think it really, really helps at the end of the year when you have this tax bill, right? Because what happens is many new business owners may forget that there's going to be taxes that need to be done. And then suddenly they get a huge bill and they don't have the cash to cover it. So a simple fix is that each month, just set aside a percentage of your profits in a separate tax savings account. So that way, when tax season arrives, you already have the money ready to pay SARS without any stress or now trying to make a plan for money. Even if you don't have to pay SARS anything in that year, at least you have that money for the next year. So you don't have to worry as much. Or you can eventually give yourself a bonus with that money. Number 8 is budget for growth and plan for the unexpected. Startups and small business owners often run into unexpected costs because equipment breaks down. Then there's last minute accounting fees or legal fees or marketing expenses. So that's why having an emergency fund is so important. Also review your pricing and your profitability. Are your prices covering your costs? Are you making enough margin? Your financial reports, especially your profit and loss statement, will help you to analyze this. And remember that growing a business isn't just about working harder. It's also about working smarter and with the right financial strategies. Number 9 is do not try to do everything alone. I know that as a startup and as a small business owner, there isn't extra money to just spend freely. But I've noticed with a lot of clients is that they try to save that money and then eventually they've got to come to an accountant or a bookkeeper and end up having to pay even more because they didn't do it right from the start. So know when to reach out for help, whether it's hiring a bookkeeper or just consulting an accountant or even using financial tools to automate that process. Staying on top of your finances does not have to be complicated, but it does require consistency. So set aside time every week to review your finances, and your future self and your business is going to thank you for that. Next slide, please. So again, I have a question for you guys. What bookkeeping task have you been putting off since you started your business? And let's be honest with this. Number A is recording all income and expenses. Number 2B is drawing a salary or keeping finances separate. And C is looking at bank statements and your bank balance. And D is all of the above. Let us know in the comments. And I'm just going to give you guys 1 minute for that. And I can move along to the next slide in the meantime. So far, I'm seeing 2 Ds here, but I'm not judging today. Okay, so I am going to keep an eye on the comments, but I'm going to also move along and try and maximize the time that we have. So how can startups effectively track their income and expenses without the overwhelm, right? Because one of the biggest challenges for startups isn't coming up with a great business idea, but it's keeping your finances in check. Many entrepreneurs feel overwhelmed when it comes to tracking the income and the expenses. But here's the good news, it doesn't have to be complicated. So in this slide, I'm going to be sharing practical strategies that will help you manage your startup's finances effectively without getting lost in the spreadsheets or the paperwork. Number 1 for this is use simple accounting software. We are going to get into this more so that we could analyze the different types and which one is suitable for you. But the easiest way to take control of your finances is using the right software. So if you're still manually recording transactions or you are juggling multiple spreadsheets, you're making things a lot harder for yourself. Instead, use cloud-based accounting software, which are designed for small businesses. Like we have Sage, we have QuickBooks, Xero, and we have Zoho. So these tools, or some of these tools, can connect directly to your bank account. They can automate your expense tracking. They can generate financial reports, and they can make bookkeeping stress-free. So just a few clicks, you can see how much of money is coming in, how much is going out, without spending a ton of time on hours, or a ton of time on calculations, or stress for that matter. Number 2, again, is separate your business and your personal finances. So I have included this, like I said, in a few slides, because I really want to stress this point. And hopefully by the end of this, if there's anything that you guys stop doing, it is not separating business and personal finances. I see it all the time. Business owners are mixing their personal and their business finances. Imagine trying to track your startup's profits while you have all of these personal items in there. It's really just a recipe for confusion. So open up that separate business bank account, use a business debit card, and pay yourself a salary from your company instead of randomly withdrawing money. This really does affect tax time when you are making drawings from the company without drawing a salary itself. So save yourself from that, please, and open up the separate business bank account. Number 3 is automate your expense tracking. So for this, it really is something that is time consuming and it is prone to mistakes. So use receipt scanning apps. There's Dext, Expensify. You can digitalize your receipts on this. You can also set up your bank feeds on your cloud-based software to auto-import transactions into your accounting software. And you can enable automatic expense categorization so that your software sorts out expenses for you. Number 4 is set up a simple expense category system. Many startups and small business owners waste time overcomplicating the expense tracking. So instead of tracking every single purchase individually, group your expenses into clear categories. You can have things like operating costs, which are your rent, your utilities, your office supplies. You can have marketing and advertising as a category, which would include your website fees, your ads, your branding. You can have your salaries and payroll. This will have your employee fees, your contractors and your freelancers. And then business travel and transport, you can put it in your flights, fuels, transport costs, instead of separating them each into individual categories. If you do it this way, you organize your expenses into broad categories, you'll very quickly see where your money is going without drowning in all of the unnecessary details. Number 5 is schedule a weekly finance check-in. I do this, I actually do it daily though, most of the time, right? But at least a weekly finance check-in. Just spend 30 minutes a week on your finances and it will save you a lot of financial problems down the line. Each week, take the time to review your income and expenses, to check your outstanding invoices and follow up on payments, and to file digital receipts and check your bank statements. In this way, you will catch mistakes early, you're going to start spotting trends, and you're going to stay in control of your business finances. Number 6 is set alerts for due dates and cash flows. Many businesses struggle with missed payments, with late fees, and with cash flow shortages, but it's very preventable. To stay on top of your finances, set calendar reminders for tax deadlines and for supplier payments. And that's really easy to do. Just use your Google Calendar. You can schedule in your reminders there. Also set up low cash balance alerts with your bank. You can also have automatic payments for recurring expenses, so you don't have to manually go in every month and pay that expense. You can also set reminders for taxes. So when is PAYE due? You can have a reminder on that. You can have it for your VAT, provisional taxes, income taxes, and then just set up follow-up reminders to let it remind you a few weeks in advance or months in advance. That's also very, very helpful. Number 7, again, hire a bookkeeper or an accountant when needed. I'm not going to go into that one further. Okay, next slide, please. How do you currently keep track of your business income and expenses? I am curious to know the answer to this. So do you use an app or a spreadsheet and update it regularly? Do you jot things down when you remember? Do you have a folder somewhere with all the slips, you think? Or it's all in your head? Your brain is your bookkeeper. It's nice to see some A's. C. Thank you guys so much for engaging. Next slide, please. Choosing the right bookkeeping software for your startup or your small business. Bookkeeping is the language of your business, and choosing the right software to manage it is like hiring a reliable team member who's always on time, who never takes sick leave, and who helps you to make better decisions. But not all tools are made equal. So for startups and small businesses, we need something that's affordable, we need something that is efficient, and we need something that's simple to use without compromising on powerful features. So let's unpack the options that are on the market right now and that are the best options so that you can make a confident choice. Next slide, please. I'm going to highlight 4 standout options, which is Xero, QuickBooks, Sage, and Zoho Books. I've personally used all of these, and I did go in and research it deeper as well for you guys. These are cloud-based software. They're reliable and they're well suited to South African businesses, but each one of them comes with their own personality, so to speak. Right? Xero is very sleek. It's very user-friendly. Even if you're not an accountant, It works in real time, so it syncs your bank transactions and gives you a snapshot of your financials. Plus, it integrates with a ton of other apps from your payroll to your inventory. It's great for established businesses who can afford it or are dealing with multiple currencies. It is a bit expensive. It starts at around, I think, 450 Rand a month. Or 450 Rand a month, right? But that is the very basic option. So you'll see that I've highlighted in yellow the comparison options, which offer very similar features or slight differences, but that would be what you would be comparing with, because the very simple option is not the one that you guys would need. The next one is QuickBooks. It's a very popular choice globally. It automates your invoices, your expense tracking, your tax calculations, and it connects directly with your bank for seamless reconciliation. If you want something scalable and easy for your accountant to access, then this works. The plans start from 276 Rand a month, but as I said, comparative to the other cloud-based apps, we would be looking at the 427 Rand option. Then we have Sage Business Cloud Accounting. I use this as well. I'm also a practitioner in this, and it is a very strong local contender to the other three because it's built with South African VAT compliance in mind. So if you are VAT registered and you're having to pay over VAT to SARS, I would highly recommend that you go with Sage. It's simple, it's efficient, it does have excellent support, and it's great if you're looking for something reliable without all the bells and whistles. It's affordable for South African businesses. It's the cheapest compared to Xero and QuickBooks, which do the same thing. What makes it different from the next option that we're going to discuss is that it provides you with reports like your income statement, balance sheet, management accounts. So like I said, it starts from 200 Rand a month, but the ones that you would need would be the one that is, 220, the one for 400 Rand a month. That would be the one to get. And then with the Zoho, this is really great for bootstrapped entrepreneurs, right? It has a free plan. So if your business invoices for under 1,000 invoices a year, then you will be able to use the free version. The free version also includes your invoicing, your expense tracking. With the capturing of the bank statements, though, you will have to upload that manually and enter your transactions in manually, unlike the other three software. However, you can have that on your paid version with Zoho, which you will also get that you'll be able to do your VAT calculations as well, right? But that's on the paid version. And then on the paid version, it also can integrate with Zoho's full business suite from your CRM to your HR. So it makes it a fantastic option to grow. These are some bonus tools that you can pair with your accounting software. However, they're just nice to have. So this is, the first one would be Dext. You can snap a picture of your receipts and boom, it captures all the data. You have Expensify. It's really great for tracking staff expenses or business trips. And then you have HubDoc. This fetches and stores financial documents automatically. So think of it as your virtual filing cabinet, right? Like I said, they're not essential from day one, but they are great when you start to grow your business. Next slide, please. So how do you choose the best option for your business? Know your business stage. So if you're still a small business and you are working solo, then something free or low cost like Zoho Books may be perfect. Also look at the features. So do you need inventory or payroll, multi-currency, VAT reporting? If that is the case, then look at Xero or Sage. And think long-term, right? Choose a platform that can grow with you and not one that you're going to outgrow in 6 months' time. I don't know if you guys have ever changed over software, right? Invoicing software, but it's actually a very tedious process once you've captured all of your clients or customers on one app and then to transfer over to another app. So I would say start with something from the beginning. It may not be something free, but it is worth the investment because it will grow with you. Another very important thing is ask about the support that you get, especially if you are not tech savvy. Make sure that there's help available and good help. And finally, if you have an accountant or a bookkeeper, talk to them and ask them what works, what doesn't work. We are here to guide you and your specific business. Next slide, please. You definitely don't need to be a financial expert to have control over your business finances, but you do need the right tools and you need a bit of support. And the software you choose now can really save you a lot of hours down the line. It can prevent costly mistakes and it can give you peace of mind. Okay, so we are on the question slide and you guys can start answering for it. Spreadsheets are actually okay. They're not bad. Like I said, I know a lot of business owners save on this because of the costs involved with a proper software, but there is the free one. There's Zoho Books that's available. Okay, next slide, please. So I don't know if you guys have heard that there is a difference in the way that you record your accounting, right? There's a cash basis and there's an accrual basis. And it's really, really important to know which type of method you are choosing for your business. So which one is right for you? We're going to break this down in a way that makes sense. If you guys don't know what cash basis accounting or accrual basis accounting is, you're going to learn it now and you'll know which one to use going forward. Cash based accounting, it is the simplest method. So basically, you only record your revenue when you actually receive that money, and you only record your expenses when you pay them, right? It's great for small businesses and small sole proprietors because it's easy to manage and it gives you a very clear picture of your cash flow. However, it doesn't account for money owed to you. So your debtors, your accounts receivables, or any money that you owe, which are your creditors, right? So it can make it misleading. On the other hand, the accrual basis of accounting records transactions when they happen, regardless of when the cash actually moves. So if you send an invoice today, it counts as revenue today, even if you get paid in the next month. If you get a bill, an expense bill, it counts as an expense immediately, even if you pay it afterwards. This method gives you a much clearer picture of your financial health, which is why it is required for companies that follow GAAP or IFRS standards in South Africa, and for those that need audited financial statements. The only types of businesses that the cash-based accounting should be used is for a sole proprietor. But which method should you choose? That answer is going to depend on your business model. If your business is small, it has straightforward transactions, it does not have inventory, it doesn't have any debtors or creditors, then cash basis may be the better option because it's easier. It also keeps your accounting costs low and it helps you to manage your cash flow efficiently. But if you are planning to grow your business, which all business owners are, or attract investors, or apply for loans, or deal with complex transactions like inventory, then you need to be using accrual-based accounting. It's a smarter choice. It gives you a more accurate financial picture, and it helps you with strategic decision-making and prepares your business for growth. Next slide, please. We will skip this question and move on to the next slide, please. So some of the biggest financial mistakes that startups make, startups and small business owners. I know that you guys wear so many hats. You are the visionary, you are the marketer, the product developer, the customer service rep, and of course, the bookkeeper and the financial strategist of your own business. But let's be real, accounting and finance are often the last thing on the to-do list. And that can lead to very costly mistakes. So in this slide, we are going to be talking about the biggest financial mistakes that startups and small business owners make and how you can avoid them. Number one is not having an emergency fund. And this is a big one. I cannot stress enough how important this is. Every business will face tough times, whether it is slow sales or unexpected expenses, or even delayed payments from customers. And without that safety net, you may find yourself scrambling, or worse, even closing your doors. The solution would be to start now. Even if it's just a small amount every month, have a separate savings account for your business and treat it as a non-negotiable expense. Your future self is going to thank you for this one. Number two is not using financial professionals. Again, you started your business because you are passionate about what you do, but that doesn't mean that you can afford to neglect your numbers. Hiring an accountant or a bookkeeper is not a luxury. It is a necessity. Having that professional guidance is going to help you to make smarter financial decisions, to stay compliant, and to grow strategically. So don't wait until you're in a financial mess to do that. Try to get help early. Number three is overspending on inventory. Many entrepreneurs get carried away. They buy more stock than they need, and they tie up cash in those unsold products. The solution would be to start lean. Keep track of sales patterns and stock smartly. Your money is better spent in areas that are actually going to generate revenue. Number four is not emphasizing cash flow. It's easy to get obsessed with the profits, but cash flow is king. You could be making sales, but still struggling because money isn't actually coming in on time. So always monitor your cash flow, track your incoming payments, your expenses, any shortfalls. A profitable business can still fail if cash flow is ignored. Number five is not planning for taxes. Again, if you've ever received a surprise tax bill, then you know what I mean. So plan ahead, put money aside for your taxes every month, register for VAT if required to do so. And if you're unsure about tax obligations, then consult with a professional. Avoid your tax headaches now while you can, because it causes a lot of stress later on. Number six is pricing too low. Many entrepreneurs underprice their products and their services at the start. They think that lower prices will attract more customers. But in reality, pricing too low hurts your profit margins and it undervalues your brand. So instead of competing on price, focus on the value that you provide. Do your market research and price fairly. And remember, quality clients are willing to pay for quality service. Number seven, not separating your personal and business finances. It's really a recipe for disaster. So open up a dedicated business bank account, draw a salary every month. Once it's in your personal bank account, then you can use it for your personal expenses, but please don't mix that up in the business. Number eight is spending too much too soon. So it's really tempting to go all out, to get fancy offices, to get branded cars, to get top tier equipment, but overspending early on in your business can leave you with very high costs and very little profit. Be smart with it. Focus on your essentials first and then upgrade as your business grows. The key is to spend where it matters most. Number nine is depending on one revenue stream, especially in the current economy that we are facing. A common mistake is relying on one big client or one source of income. What happens if that client leaves? Then your business could collapse overnight. So diversify your revenue. Look for multiple income streams so that you're not dependent on just one source of income. Number 10 is ignoring a budget. It's very easy to overspend, to miscalculate profits, or struggle with unexpected costs. So take time to plan and stick to a budget, track your numbers, adjust where needed, and make those data-driven financial decisions. Next slide, please. How many of the above mistakes are you guys making? Amina, should we continue on after this, or would you like to go into the Q&A?
We can continue, it's fine.
Okay. One of the biggest mistakes that startups make is treating financial record keeping as an afterthought, right? Your financial records are like the heartbeat of your business. If they are not updated regularly, you're not going to have a clear picture of where your business is headed. And that can lead to cash flow problems, to compliance issues, and to missed growth opportunities. So how often should you be updating your financial records? The answer is going to depend on the size and on the activity of your business. But best practice follows a structured financial routine. So daily or weekly, record all your income and expenses, which are things like your sales, your purchases, your invoices, your payments. Reconcile your bank and your cash transactions. Make sure what's on your system matches what's in your bank account. Keep an eye on your accounts payable and receivables, so you always know who you are owing money to and who is owing you money. This is very important because staying on top of these weekly or daily transactions will ensure that you are not chasing up on these unpaid invoices or overspending without realizing it. Monthly tasks would be to prepare your profit and loss statement, your balance sheet, and your cash flow statement. These three reports will tell you if your business is profitable, if it is stable, and if it is liquid. Reconciling your bank accounts and your credit card statements as well. Reviewing your expenses and your cash flow. This will help you to plan ahead and to avoid running out of funds unexpectedly. If you are VAT or PAYE registered, then you will want to ensure that your submissions are made on time. The monthly check-ins keep you compliant and financially aware so that you can make informed decisions about spending, saving, and growing your business. Quarterly, you want to do a strategic review and a little bit of tax planning. So here is where you'll assess your budget versus your actual spending. Are you staying on track or are you overspending? You'll also review your overall financial performance and identify any growth opportunities. If you are required to file provisional taxes, this is actually biannually, but I don't have tasks for that. So biannually, you will look at your provisional taxes. You also want to start planning for tax deductions. The earlier you plan, the more you're going to save at tax time. Now, why is this important? Your quarterly reviews ensure that you are proactive and you're not reactive when it comes to taxes and to financial growth. Annually, you'll want to look at your big picture and your compliance, right? So think of this a lot like setting, I don't know how many of you guys do annual goal setting or monthly goal setting, but this is finances is a lot like that. You'll do your yearly, you'll do your weekly, your monthly, and then your quarterly. So annually is where you are going to look at your big picture again and your compliance. Here is where you or your accountant will prepare your financial statements, which is crucial for your compliance, your funding, your strategic planning. We also want to conduct a financial health check to evaluate the year's successes and its challenges. Submit your tax returns. This will be your company income tax returns or your individual tax returns if you are a sole proprietor. And review your business valuation. So if you are looking for investors or for funding, then it will be critical to do this at that point. Next slide, please. Okay, so the key financial documents that every startup must maintain would be your profit and loss statement. This is going to track revenue, expenses, as well as your profitability. Your balance sheet, this summarizes your assets, your liabilities, and your equity. We have our cash flow statement. It monitors how your money moves in and out of your business. Your general ledger, this is a recording of every financial transaction that happened in that tax year. Your bank reconciliation reports, this ensures that there is accuracy in your financial records. Your accounts payable and receivable, it keeps track of the invoices and the payments. And then we have our tax records and compliance documents. It includes your VAT documents, PAYE, and any SARS correspondence. Your payroll records, this ensures that the salaries are recorded, as well as all the supporting document, the UIF, the deductions, the contracts. Business budget and forecasting reports. It helps with planning and with your cash flow projections. And then your invoices and receipts. It's essential for tax deductions and financial audits. Okay, Amina, should we go into Q&A? I think there was a few questions. Okay, so I just want to look through the comments to see, I know there was a question here. Okay, so there was a question on my thoughts on using one PTY to run multiple ventures. Okay, you can use one PTY, right, to run multiple ventures. However, it's not really advised because you're not going to have accurate financial records of all of those ventures. It's always better to divide it. There is also tax benefits to doing it that way if you divide it, right? So my quick answer to that would be that it's better to divide it than to have it all in one. It's better for tax and it's better for your bookkeeping. However, if you are trying to save on costs, then I understand using one PTY. See, there was another question in the comments. Okay, now we are in Q&A. So if anyone's got any questions, now's your time to ask before we conclude and let you guys know how you can contact us and get your freebies. Anybody, any questions, you can unmute yourself and you can ask it as well. Please don't feel shy.
Hi, everyone.
Hi,
Hi.
Makot.
I was checking if you can hear me. Hi, Humairaa. How are you?
I'm well, thanks. How are you doing? Nice to have you here.
Good, thank you. Thank you so much for the invitation or like for advertising this. And I think I'm definitely one of the people that need to start organizing myself. And I think maybe my question is just around. So if you are an entrepreneur and you realize that you've made some mistakes and you know, like, I don't know, these records that you haven't kept, or maybe PAYE, or whatever it is that we've outlined throughout the conversation today. What are some of the things that you can begin doing to kind of make sure that you are compliant, and that you start basically fixing your mistakes? I think many of us here are also afraid of SARS, so we don't want to find ourselves, you know, on the other end of being called and realizing that you've got a huge bill. A lot of the times, some of the things that you were highlighting are just, you're just surviving, so you don't think to yourself, oh yeah, there's also regulatory stuff that I need to be paying attention to. So yeah, the essence is really around what are some of the things that you can start doing practically, maybe to start giving yourself an opportunity to fix whatever might have been messed up, even if it's been maybe a few years of the business. Yeah, thank you.
Got it. That's a good question. Thank you so much, Makoto. So it's going to be really difficult to go back and get all of that information. Not impossible, but difficult, right? So what I would advise to prevent yourself from feeling overwhelmed is to at least start to gather your bank statements together and to have that on record. If you can just do that part for all of your backdated records, it will help a lot. But going forward, every time you get an invoice or an expense or any payroll documents, then you can create a folder for it. There are things that your accountant will be able to provide you with, like the SARS correspondence, you know, some of the SARS documents that you should be keeping as well. But the invoices, the expenses, if there's any invoices and expenses, receipts, all of that you can get, get from your whichever companies you deal with, then get those and store them. However, if it's too much of a daunting task, then I would advise to start with it going forward and just keep the bank statements from the past. I hope that answers and helps you.
Yes, that's helpful. Thank you so much.
You're welcome. Is there any other question, quick question before we wrap up? Okay, nobody. Okay, so we've definitely covered a lot today. And I don't want you guys to be feeling overwhelmed by all of it. What I do want to let you guys know is that you don't have to do this alone. As you can see as well, there's a lot of other business owners that have similar problems to you guys, or that are doing things in a similar way. So you're not alone in that. Remember, the good bookkeeping is not just about ticking boxes or staying compliant. It is about knowing your numbers so that you can grow with confidence, that you can make smarter business decisions, and you can build a business that truly supports your goals, whether that's freedom, stability, or long-term success. So if there's one message that I hope to leave you with today, it's that don't wait until your business is big enough to get your finances in order. Start now. It's the clarity and the control that you will have that is going to help you to grow in the first place. And here's a little reflection as we wrap up. If your future self, that focused, that financially savvy business owner, were to look at her books right now, would you be proud or would you quietly be panicking? And the good news is that you get to choose how that story plays out starting today. Next slide, please. If you found today's session helpful, then I would love to offer you a free 30-minute one-on-one coaching call. We'll take a look at your current systems and your challenges, and I'll help you to map out simple, actionable steps that you can take to get your finances to work for you and not against you. These are our details here. That's how you can contact us. I am going to also put it in the comments section below as soon as I'm done here. You can also get our free resources on our website, as well as read our blog post. There's lots of helpful information that can help you guys there. Next slide, please. like I said, I know Amina is going to send out a feedback form on behalf of Minara, and we really, really would love your feedback. We'd love for you to complete that so that we can help to better tailor presentations and events and topics going forward that are going to assist small business owners. I think Amina will also share again in the chat how you can get in touch with Minara and become a member so that you get access to these types of events in future. Next slide, please. Jazaka, thank you to the Minara Chamber of Commerce and to the Minara SMME Committee for making today possible. And thank you to all of you for showing up, for investing in your business, and for being part of this webinar. Thank you for your time. I'm just going to put in my links in the comments so that you guys can reach out if you'd like to get the free resources or book your 30-minute consultation with us.